Hi all, welcome to the discussion on the latest structured finance quarterly update, which is also available on the India Ratings website. We are going to talk through securitization updates along with issuance volumes in the market highlighted in the report, particularly the new ratings and structures assigned and market risks that could impact the securitization market in the near future. I am Vinit Gala, Analyst Structured Finance India Ratings, and I have with me Payal Anand, Senior Analyst Structured Finance India Ratings. Welcome, Payal.
Thanks, Vineet.
So, Pal, how has been the first quarter gone by, and what have been the key highlights in the securitization market?
Yeah. So the first quarter was busy in terms of the new issuance volumes. In just the PTC transactions, if we talk about, we have seen a big jump year on year. So that is positive. The volumes are still not back to the pre-COVID levels, but we have seen a good start when we compare it to the last quarter of FY22, which obviously was the highest issuing quarter of the year. We have numbers in line with that quarter. So that is a big, good start to the year. We have also started to see PTC yields being picked up by 50 to 100 basis points as compared to the same deals last quarter.
Okay.
Of course, on the back of the increasing interest rates. Another theme is like we have seen pools backed by unsecured loans, they are back, and we have seen issuances in the unsecured business loans, microfinance space last quarter, which is of course a positive sentiment for the asset class.
Interesting, Payal. But if we look at this from a issuance perspective, what is driving these volumes? As that's not the picture we
Right.
usually see in the first quarter of the year.
Correct. So what we are saying is that the front-ended supply so far in this year, obviously it has been driven by there's a continued higher funding demand, but originators are also trying to lock in yields ahead of any more interest rate hikes. So that is one. But honestly, we are saying that this number could have been much higher as investors still lacks that kind of confidence with the parallel interest rate hikes, as it will impact the borrower capabilities also in these kind of loans to, pay back.
Right. So, talking about the investor confidence and investing in unsecured asset classes, what changes have you seen in structures to safeguard these transactions?
Yes, interestingly, we have been seeing new add-ons in these kind of transactions, mainly in the unsecured loan pools here. We have seen a lot of transactions with turbo principal repayment mechanism, which we used to see, but they are now back, and we have seen a lot of these in the last quarter.
Right.
What happens in these kind of turbo structures, of course, is that the residual cash flow will flow back and will be used to accelerate the redemption of the BTCs. So even in these kind of timely interest and ultimate principal structure, which is a very common structure in the structure finance,
Right.
this TIUP is also accompanied with a higher internal credit enhancements in the form of OCs and or the subordinate tranche, and over and above, there are multiple triggers in these kind of transactions. Triggers in the form of default rate trigger or a rating level trigger or a collection efficiency trigger. So there are multiple of these triggers which are associated in these kind of structure, where the breach of these triggers would lead to now the turbo amortization of the PTC's obligations.
Right. Also, talking about new structures, I wanted to highlight the replenishment structure,
Right.
which is picking up in the market right now.
That is
So
correct.
these are the structures wherein the collections from the pool during the specified replenishment period would be used to purchase new loans from the originator. Such a structure not only allows the originator to lock in interest rates for a longer period, but also helps create long tenure PTCs even using pools with very short tenure loans, which benefits both issuers and investors. We've also seen a few transactions rated by India Ratings wherein this structure was prevalent. So that was one of the big theme for this quarter as well.
Right.
While having discussed the different structures, issuance trends, how has been the performance of these transactions across asset classes?
Yes. If we look at our outstanding transactions, collection efficiency, we've been saying it's back to pre-COVID levels across asset class. DPD levels have been stabilized as well, barring
Right.
like few of the unsecured transactions.
Mhm.
But but these are also highly amortized one and are backed by high credit enhancement.
Okay.
But having said that, now if we look at the impact on the asset classes, it's there. If we talk about vehicle loans, if we say diesel prices remain steady, but they are at high levels, of course, and at the same time, freight rates are not picking up, so which puts pressure on the CV borrowers.
Right.
So this will be this will be a key monitorable going forward. At the same time, we have also highlighted that high interest rates and the impact of inflation on the borrower cash flow, specifically on the home loan or a housing segment borrowers. So that will be there, especially in the affordable housing, where the increasing cost of construction is also one of the factor.
Okay.
For now, we have not seen these indicators impacting the existing transactions, but this is something we are tracking regularly, and we can say could have an impact in the near future if the stress continues.
Also, to add similarly on the small business loans,
Yes.
the margins of certain small business borrowers have been affected due to high input costs and has led to higher working capital requirements in these businesses.
Correct.
The rising interest rate could also, put further pressure on these borrowers. So, Payal, to wrap up, if you could throw some light on what are the things to watch out for.
So as I said, the impact of interest rate hikes on the different asset classes would be a key monitorable.
Right.
From the transactions point of view, as the interest rate is increasing, the PTC investors are expecting higher interest rate. So the EIS, which is the excess interest spread, is
Right.
potentially decreasing in the transactions.
Okay.
So this is something that will continue. As the performance of the existing transaction is something to watch out for,
Right.
because NBFCs have also started increasing, their interest rates. So the performance of the existing transactions will be something crucial and to look at.
Great. Thank you, Payal. Thank you everyone for listening. The report is now available on the website.